economic growth over the next 3 months is going to shock people to the downside. And it's going to change everybody's narrative from, okay, we're in this sticky inflation environment, the supply constraints, to, oh my God, we've broken the economy.
The crypto market has recently shot back to life. Bitcoin is now up 25% from its lows, and Ethereum is up a huge 74%, with rumors that the merge will be coming soon. And so, has the bottom of this big crypto sell-off been hit? Are we building back up from here? Or is this just another bull trap, giving a false sense of security before another big leg down? Raoul Pal recently gave his latest market update, and we'll be looking at the key takeaways as what he sees is not looking good. As always, if you do enjoy anything in the video, then drop a like, always appreciated. Okay, first up, crypto's been on a nice little run since it bottomed out in June, and so the question is the worst now over, or are we just in a bear market rally?
So in crypto, I don't think it is. I think it's the foundational rally that starts it all off. In equities, I'm not sure. My hunch is, because of that year-on-year rate of change that I showed you, that it's not quite fully pricing in where we should be going. We might have another leg lower, or it might squash along the bottom, and because of the year-on-year comparisons versus last year, in 2 or 3 months' time, it kind of maps that. So I don't know is the answer, and I wish I had a better answer, but I don't. I'm pretty 50-50 on that one. So yeah. That's why I'm not involved. As I said, I am involved in those long duration stocks, but in the bulk of the market, I'm like, I don't see a good short opportunity here, and I don't see a good long opportunity here. Feels 50-50.
So when it comes to timing the market in the short term, it's virtually impossible. And Raoul says he's really not sure, and for stocks, it really could be 50-50. Now, what was interesting was his call for crypto, and he believes that this bounce back is the foundational rally which starts everything off. So a very interesting call. And for me, if we do get another big sell-off in stocks, I cannot see how crypto doesn't also take another big leg down. For crypto to suddenly decouple from stocks would be very surprising. So it's a very interesting call. Okay, next up, Raoul is always talking about macro. Macro this, macro that. He calls himself a macro investor, and he says all investing is all about macro. So what exactly is macro investing?
So what is macro? It's macroeconomic investing. So what you're doing is using the global economy as a forecast for asset prices, and you're looking for dislocations, mispricings, or opportunities based on that. So normally how we look about this is the business cycle. The business cycle is the ups and downs of GDP that economists never forecast because they use linear models. But once you understand that the economy is cyclical, you understand, okay, it's forecastable, because usually when it rolls over from a peak, it goes to a trough, which is a recession. After recession, you go to recovery. That cycle, you can show a 3-year-old kid and they go, oh yeah, well, the economy goes up and down. You ask an economist at the Fed and they say it's linear, as do all economists. It's crazy. It's crazy that people don't model this, which is why macro-based investors tend to use the business cycle, because it gives us an edge. And why all economists tend to be very wrong at turning points and these acceleration points, but tend to be right over a longer term time horizon when you look at averages. So when you start using these, you realize that it actually drives all asset prices. So the year-on-year rate of change of copper, oil, gold, equities, credit, emerging markets, bonds, everything is basically related to the business cycle, which is global supply and demand. So once you understand how to use the business cycle and what it is, and then how to look at asset prices against it, it like opens up this magical mystery world that is so confusing until you do this. And once you do this, you're like, oh, I get it now. It's all correlated.
So basically, macro is macroeconomic investing, and it's trying to forecast asset prices primarily using the business cycle. And Ray Dalio also shows the business cycle nicely in his short-term and long-term debt cycle. This is where investments typically go from overvalued to undervalued, overbought to oversold, expansions and recessions, bull markets and bear markets. And as an FYI, on average, US recessions last about 11 months and US expansions about 8 years. And macro investing is all about trying to predict what comes next. Okay, and to finish up, the big question we all want to know is what happens next? Let's say in the next 3 to 6 months.
I think consumption holds up okay, but not in the big ticket items and stuff like that. We've seen the confidence has collapsed there, but I think it's short and sharp, and I think equities bottom maybe 6 months before the economy, and therefore I'm looking for, if we do have another sell-off, it's short and sharp. So it's kind of this August, September, October period is peak risk for equities, maybe even shorter term than that, maybe just July and August. But let's see, I can't get good odds on it yet.
Raoul believes we're about to enter the time of peak risk for stocks over the next 3 months. And he warns of a growth implosion where we could get another short and sharp sell-off. He believes stocks could see another big leg down, but interestingly not crypto, which he must then believe has already bottomed. And as a macro investor, he's always forecasting 12 to 18 months down the line and trying to predict what comes next. So there you are, guys. Hope you enjoyed. Those were the latest insights from Raoul. I did cover my latest thoughts on the market, which you can find here. But for now, just to say, if you did enjoy anything in the video, then drop a like. And a big thank you to everyone who does. And I'll see you in the next one. Bye for now.